The Reserve Bank is widely expected to keep interest rates on hold today, revealing some of the pressure on households ahead of the Christmas holidays. And this, is real for some people now. Joining me is business reporter Edward Boyd. Ed, there's no doubt that people are still spending. Some aren't feeling the pinch, but a lot more families are. So what is the RBA going to do this afternoon?
Well, 26 economists think the cash rate's going to be kept on hold today. Just one economist thinks the cash rate will rise to 4.6%. Remember, the RBA's lifted rates aggressively since May last year. They've raised rates 5 times in 2023, most recently just last month when they lifted the cash rate to 4.35%. Which is the highest level since November 2011. You can see the interest rate rises on the screen now. It's really been a very sharp increase, the sharpest increase in decades from the central bank here in Australia. But you're right saying, Laura, there are a lot of people out there that are feeling the pinch from higher interest rates and for higher repayments on their loans. For example, a $500,000 loan, the average repayments per month are roughly $3,500 right now with where rates are, but they were $1,200 less before rates began rising in May 2022. So that's a significant cost that households have to find each month to put on their mortgage, and people we know are going into mortgage stress. We heard from some of the big 4 bank bosses just a few weeks ago talking about how they're starting to see mortgage delinquencies or customers in trouble on the increase. So that's a trend that the RBA is watching closely, and obviously all the big banks are watching closely as well. But the expectation today, cash rate on hold just a few weeks out from Christmas, Laura.
Some economists think that the RBA has done enough. Other economists are talking about already when these rates might start to be cut by the RBA. What's that date? It seems to be pushed back every time we speak.
Yeah, look, well, we're speaking to Paul Bloxham from HSBC later today on Business Now, and he's not expecting the cash rate to be cut until 2025, the first quarter of 2025. So that could be anywhere between January and March of 2025. In other words, HSBC Bank expect the cash rate to stay on hold all of next year and into the start of the year after. Other economists are now tweaking their forecast as well. It's all due to inflation. You can see on the screen the monthly inflation indicator. The most recent month, it came in at 4.9%, which was a little bit lower than expected. But remember, the central bank needs inflation between 2% and 3%, and there's a long way to get to that. And unfortunately, the only way the RBA knows what to do is use monetary policy as a blunt lever, and that's what they're going to need to do for at least the next 12 months by the sounds of it from some big economists out there.
If you go on this big, rate-raising spree, as we have seen, and the RBA has justified that in many ways, and say the RBA started, cutting in the first half of next year, wouldn't that indicate that they went too hard and had to backpedal a bit? So Paul Bloxham's theory kind of makes sense here, doesn't it?
Look, if they started cutting the cash rate in the next 6 months, then it would be a sign that they went too hard. But I think what we've seen from our central bank is they waited a bit too long before they started to raise the cash rate. You look overseas to America as an example. The US Fed's expected to start cutting the cash rate early next year, in the first quarter of next year. That's why the US stock market's been doing so well lately. Whereas our central bank, all of our forecasts show we were a bit behind the 8 ball to begin with. We didn't start raising rates until a good six plus months after the US, after the UK. And for that reason, inflation in Australia is quite a bit higher than other economies around the world. So we're kind of playing catch up now. The question is, yes, when will rates go down? And right now, it's looking, unfortunately, like probably not till late 2024, early 2025.
Yeah, and there could be a few more increases before then. Ed, thanks so much. We'll see you this afternoon.